Exit architecture. Don't miss these tips if you're selling your business. For many business owners, selling their companies is a significant milestone in their career. It is a time when they reap the rewards of their hard work and dedication, but it's also a time of uncertainty and complexity. There are countless decisions to be made and many things to consider before making the sale. As a business owner, you need to be aware of all the factors that could impact the sale of your company, including its value, the motivation for the sale, who is in charge of the transition, and how it will impact your employees and culture. In this video, we will explore 6 things that business owners wish they knew before selling their company. The first, get the right team in place. One of the most important things you can do when selling your company is to assemble the right team. You need a team that can guide you through the entire process and coordinate all the different moving parts. It all starts with the exit architect that will assemble a team of qualified CPAs, attorneys, and other professionals that will allow you to maximize the value of your company. Another thing that business owners wish they knew before selling their company is that they could have utilized their estate tax gifting exemption. By transferring company stock and other assets to loved ones, you can take advantage of the current exemption amounts before they sunset at the end of 2025. This is a complex strategy that requires careful planning and execution. So please don't do this on your own. Talk to us first and we can go over your options and give you some direction. 3. Transfer assets to states without income taxes. As you approach a sale, you should explore ways to transfer part of your company to other jurisdictions, including to states without income tax, such as South Dakota and Nevada. This can pay significant dividends from an after-tax perspective and help you get the most out of your company. 4. Make the most of your company structure. The way your company is structured can have significant impact on outcomes of the sale. For example, if you own C Corp stock, you might qualify for a Section 1202 exclusion, also called the Small Business Stock Gains Exclusion, which could mean eliminating up to $10 million in capital gains tax from the sale of the company. You should fully understand the legal structure of your company and what type of entity it is and the potential benefits it can provide as you approach the sale. 5. Seek buy-in from your employees. It is essential to bring your employees into the loop regarding your exit plans at the right time. If you don't, it can be damaging to morale and it could even derail the sale if key staff members leave or are disincentivized. You should make sure you give your team an incentive to be all in and get excited about what's to come. 6. Don't wait for the perfect opportunity to sell. One of the most common mistakes that business owners make is waiting for the absolute perfect opportunity to sell. If your company is growing, that's great, but there will never be a perfect time to sell. You need to consider what you want the proceeds of the sale to do for you, your family, and your team, and let that guide why and when to sell. In conclusion, selling your company is a complex process and requires careful planning and execution. By knowing what to expect and working with the right team, you can maximize the value of your company and achieve your desired outcome. You should be aware of all the factors that could impact the sale of your company, including its value, the motivation for the sale, and who's in charge of the transition, and how it will impact your employees and culture. With the right approach and clear understanding of what you want to achieve, you can successfully sell your company and move on to the next chapter of your life. To discuss any issues or concerns you might have around selling your company or preparing to sell it down the road, contact our Exit Architecture unit at Confidence Wealth Management. Some advanced planning now might be valuable to you when the time comes to exit.